One of the greatest challenge of traders is the ability to get a valid zone for your entry, and not just a valid zone, but also getting a precise zone where you can buy low and sell high. In order to achieve this, we need to use our Fibonacci retracement tool. And in the previous video, we've discussed how we can use this Fibonacci retracement tool on a downtrend scenario. So this video is going to be brief, as I'll be showing you exactly how you can mark your key zone and how you can apply the Fibonacci retracement tool when it comes to trading in an uptrend scenario. So looking at this is a typical uptrend, and here you can see that price is doing a higher low. This is a higher high, this is a higher low, this is a higher high, and this is a higher low. So if we are to connect this using a line, we are having this way and this way. So this is a perfect uptrend, and this is a structural movement of price towards the up direction. So the question now is, how do we identify the zones where we want to make our entry? We have established that in an uptrend, the 100 level of our Fibonacci retracement tool will be at the swing low, which is our higher low, and the 0 level of the Fibonacci retracement level will be at the swing high. So these are the two zones where you will be marking your range. So our range is the recent swing high and the recent swing low. So this is exactly what it looked like. So now what is the next thing we need to do? We will now mark our point of interest in any of this range, and looking at this, our first point of interest in this case is this particular order block. So this is an order block, and looking at this point, we do not have a smart money cube. The next thing we have is a fair value gap, and this fair value gap is here, because this fair value gap is indicative on this particular candle. So what do we want to see now? Price retraces back. So now when price come into this point of interest, which is our fair value gap, we will now want to see with our Fibonacci if at all price is already at anything below 50 level of the Fibonacci. It is any point of interest that fall into this zone that we are going to trade. So that is exactly what we will do. And in this case, you realize that this fair value gap here fall into the zone of 50% of the Fibonacci retracement tool. And immediately that happens, we have a candlestick formation, that bullish candle there, and that leads to this uptrend. So assuming this is a recent price now, we'll soon go to the chart to see how we can apply this. If this is a recent chart, this is our higher low, this is our higher high. So it means that this is a swing low and this is a swing high. So our Fibonacci now will mark our point of interest. Here could have been our order block, and again we have this smart money cube here. So do you see? So what is the next step? We will now put our Fibonacci retracement tool on this range. So once we have done that, we'll now look for which point of the Fibonacci, which of the point of value fall between 50 below of our Fibonacci level. Once we get that point of interest, that becomes our tradable zone. So let's go to the main chart and see how we can apply all of this. Typical uptrend. So let's go now to see what happens and see exactly how we can apply this. Looking at this, you can see that price has been coming down, lower high, right? Lower low, lower high, lower low. So afterwards, price change direction. We have this push to the upside, which break this structural point. So here is our break of structure, right? So immediately we have this break of structure now. We now realize that price begins to pull back. So what do we do? The break of structure already tells us that we have a change of price direction and that we are now in an uptrend. So this is where the structure broke out. This is a break of structure here, and then we'll have this move to the upside. So what is the next thing? Now that we have this, the next question you need to ask yourself is, where are the zone you will mark? Which we have already stated previously. You need to mark your order block. So we are going to mark our order block. So this is the order block for this movement. So we have the order block marked out perfectly well. What is the next zone? Is there a smart money cube? Yes, we have a smart money cube. Here is our smart money cube. Yeah, we have the smart money cube marked out in that zone. Then we still have a fair value gap. You can see this imbalance that happens here. So now, having marked this zone, we all have this valid zone here. We have our order block, we have our fair value gap, and then we have this smart money cube. Remember, when all of this happen, this is the only movement that we have. Okay, this is the only movement that we have. So all of this other movement has not happened. So what do? We now connect here. Now this is our swing low, this is our higher low, and here is our swing high, this is our higher high. So we are going to connect our Fibonacci retracement 100 level here, and then the 0 level at the higher high. So that's exactly what I will be doing now. So just follow carefully. So I will pick up my Fibonacci retracement tool. So here is my Fibonacci tool, and I'm going to connect it to that particular point that I have explained earlier. Alright, so this is the Fibonacci and I've connected it perfectly. So let me zoom out so we can see this clearly. Now what is the next thing? We are now waiting for what? For price to do what? To pull back. So our point of interest now, we have 23.6. So if this price pull back to 23.6 and choose to reverse, we cannot trade it, because that is not a discount zone for us to buy. If it pull back to 38.2 and retrace back, we will not buy, because we cannot be buying there and our stop loss will be here. That is not a wise trading decision. So we are not going to make that entry. So what do? We are going to be patient, and you can see this case, it pulled back all the way to 50% of the Fibonacci. So this comes in now to mitigate this smart money cube. So the price came to mitigate the smart money cube. So and from this zone, we have this bullish engulfing candle. So we will now buy from this 50 level, and our stop loss will be here, and then our take profit will be here. So you can see how that plays out beautifully well. So because this has placed out, remember now this particular smart money cube has become invalid, but this imbalance is still valid. Price is yet to refill it, and this other block is yet to be mitigated. So we are not going to cancel those points. So now we have a new swing high and a new swing low. So now that we have established a new swing low and new swing high, coincidentally this smart money cube still fall in that zone, but I'll do something to it now. I'll mark my order block. You can see that, and here again I have a new smart money cube. This was another smart money cube that was formed. So I'm going to mark that smart money cube out. So that is the smart money cube, and then here now I have this imbalance. Obviously this imbalance is high, but let's look a bit into it. Let's mark it out and see exactly how to treat it. So that is our imbalance. So what is the next thing? We'll now connect our Fibonacci tool to our swing high and our swing low. So you can see that perfectly we have connected our Fibonacci tool to our swing high and our swing low. So what do we now want to see? We want to see price return into that zone and see what exactly will happen. So look at this fair value gap is not tradable. The question is why? Because it at 38.2 of a Fibonacci, which is not a tradable zone for us. We want to buy from anything below 50% of the Fibonacci retracement. And then look at here again, we have this smart money cube. So look at what happened. Price return, play this smart money cube, and this smart money cube is at the level of 78.2, 78.6 of our Fibonacci retracement tool. And you can see how it plays out perfectly well. So this is exactly how you can incorporate this. And after that, we now have a new swing, a higher low, and a new higher high. So this now becomes our new range. So what do? We'll mark our order block. So here is our recent order block. So after this order block, we have this. After that order block now, so we are marking what? We are marking our swing high. So you can see this. So in this scenario, we have a fair value gap. So this is our fair value gap. So this is our fair value gap. So now you can see that we have order block, OB, then we have our fair value gap. So in this case, we do not have a smart money cube. So look at what happened again. Price pulled back to what level? Look at it, 78.6. And then we have this bullish candle formation, and then you see how price play out from that zone. So this is exactly how you can take advantage of this continuously. Now we have a new swing low, which is this particular one you are seeing here. Look at our swing low, higher low, and then higher high. So I will mark this order block in this zone. This order block now is perfectly marked. You can see that, and all of this place we don't have any form of imbalance. There is no, in all of this move, no smart money cube, no imbalance. So what do? We only have a valid order block. So in this scenario, it is important you pay attention to order level of your Fibonacci retracement tool, even though there is no order block. Once you get a candlestick signal from anything the 50 level of the Fibonacci, you can begin to look for your entry. So look at, in this case, price pulled down to 50.0 level, and then this becomes our buy entry, and price pushed to the upside. So you can see how this plays out. Now we now have a new what? We now have a new higher low, higher high, higher low. So look at what happened. Price came all the way down here and break this structural point. So obviously we have a break of structure here. So here now the structure has been compromised. Price is already selling. So what do? We'll now mark our order block, which is our bearish order block. So this is the order block. We have marked it, and in this case we don't have any imbalance and we don't have any smart money cube. So what do? We'll pay attention to our Fibonacci zone. So this is already a downtrend. So we are now doing a live analysis. Okay, this is what we are expecting to see. So now we are expecting this price now to pull back to 50. From 50 zone, we'll begin to look for possible reversal. If it come to 61 and give us a bearish engulfing or a pin bar, we'll take the trade. If you come to 78, any of these zone all the way to this other block that gave us a signal to sell, we will now sell to the downside. And I believe you have learned something new. Please do not forget to give this video a like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video. And there's a link in the description of this video that will lead you to our Telegram group. Thank you and see you in the subsequent video.